Welcome to Cronos Technical Review, your trusted source for daily cryptocurrency market analysis, charts, and technical insights. Please note that this video is intended strictly for educational and informational purposes only. I am not a financial advisor, and nothing discussed in this video should be considered financial, investment, or trading advice. Cryptocurrency markets are highly volatile and involve significant risk, so you should always conduct your own research and consider your personal financial situation before making any investment decisions. Any price analysis, market outlooks, or potential scenarios shared in this video are based solely on personal opinions and publicly available data and are not guarantees of future performance. I am not responsible for any financial losses that may result from actions taken based on this content. Always invest responsibly and never invest more than you can afford to lose. Depth Cardano and Bitcoin market update. As always, if you want full access to our private charts, Elliott wave counts, detailed breakdowns, and daily market updates, Patreon and Discord community. All the links are available in the description below. Now let's get straight into the analysis because the market is currently sitting at a very critical point, and what happens next could define the next major move not only for Cardano, but for the entire crypto market. Starting with Cardano, the first thing we need to address is that price has now broken below a very important support level, specifically the 0.786 Fibonacci retracement of this corrective structure. This level had been acting as a strong demand zone for quite some time, and losing it is never a positive sign in the short term. When a market fails to hold a deep Fibonacci retracement, that momentum is weakening, and that sellers are gaining control, at least temporarily. At the same time, when we look at momentum indicators, particularly the daily RSI, we can clearly see that 8A is either testing or beginning to break below a long-standing RSI trendline. Historically, whenever 8A loses this type of RSI structure, it often leads to continuation to the downside. This does not automatically mean the market is collapsing, but it does suggest that the probability of further downside has increased. Based on the current structure, ADA now appears to be moving toward a much larger corrective support zone that aligns with the next major 0.786 retracement from the broader wave count. However, it's very important to understand that Fibonacci levels should be viewed as zones rather than exact price points. In volatile market conditions, especially when Bitcoin is under pressure, these levels can be temporarily overshot before any meaningful reaction occurs. The main risk here comes from Bitcoin. Historically, whenever Bitcoin experiences a deeper correction, ADA tends to underperform. If Bitcoin drops another 15 to 17% from current levels, ADA could realistically drop anywhere between 30 and 35%. That kind of move would place ADA in the 23 to 25 cent range. While that may sound extreme, it would still be technically consistent with how ADA has behaved in previous market cycles during periods of high volatility. Now, there is one level on the ADA chart that matters more than anything else, and that is the previous bear market low. As long as ADA remains above that level, the broader bullish structure, while heavily damaged, is still technically valid. However, if price breaks below that level and fails to reclaim it, then every remaining bullish scenario is invalidated. At that point, the market would shift into a much deeper corrective phase, with potential targets in the 13 to 15 cent region, aligning with deeper Fibonacci retracements of the larger ABC structure. A move like that would strongly suggest that something fundamentally or macroeconomically bearish is occurring in the background. Because of that, this level should be viewed as the absolute line in the sand. Losing it would completely change the long-term outlook for Cardano. As uncomfortable as it is to talk about, ignoring downside risk is far more dangerous than acknowledging it. Now shifting over to Bitcoin, because everything happening in ADA is ultimately driven by Bitcoin structure. On the 4-hour Bitcoin chart, price still appears to be forming a downward impulsive sequence. This suggests that there may still be one more leg lower before the market can form a meaningful bottom. If this structure plays out fully, Bitcoin could move down toward the $71,000 to $72,000 region. That area aligns with prior demand, key Fibonacci levels, and historical reaction zones. If Bitcoin fails to hold its current support around $86,000, that breakdown would likely trigger panic selling across the altcoin market. In that scenario, altcoins like ADA would almost certainly see accelerated downside regardless of their individual technical structures. However, markets are probabilistic, not guaranteed, so we also need to consider the bullish alternative. If Bitcoin manages to hold support and begin a new impulsive move higher, price must reclaim several key levels. First, Bitcoin needs to break above $92,000, then push through $96,000, and eventually reach the $101,000 region. That final level aligns with the 1.618 Fibonacci extension, which is a classic third-wave target in Elliott wave theory. If Bitcoin reaches that zone, it would likely face resistance from the bull market support band. A rejection there would be normal and would likely lead to a fourth wave correction, followed by a potential final push higher. However, it's critical to understand that this bullish scenario only remains valid as long as key support levels continue to hold. A breakdown below them would immediately invalidate this structure. Looking at momentum indicators, the daily Bitcoin RSI recently tested its moving average. Historically, this often leads either to another short-term dip or to a period of consolidation before continuation. At the moment, RSI alone does not provide a strong bullish confirmation. However, something much more interesting appears on the weekly Cardano RSI. In Cardano's entire history, the weekly RSI has only entered oversold territory once, and that moment aligned almost perfectly with the bear market bottom. If ADA dips slightly lower and enters weekly oversold territory again, it could actually signal a long-term accumulation opportunity, even if price action remains ugly and emotionally difficult in the short term. Bitcoin dominance is another critical piece of the puzzle. Right now, dominance is trading above the bull market support band, which historically favors Bitcoin over altcoins. This means capital is flowing into Bitcoin while altcoins remain under pressure. Bitcoin dominance could still move toward the 65 to 66% range, and if that happens, altcoins like ADA could continue to struggle. This phase of the market is emotionally challenging, but it's also where smart money often positions itself. Historically, the best opportunities tend to appear when prices are falling and sentiment is negative, not when prices are breaking to new highs and everyone is euphoric. USDT dominance also provides valuable insight. At the moment, USDT dominance is overbought on the weekly time frame. In previous cycles, similar conditions did not immediately mark market tops, but they eventually led to large downside moves in USDT dominance. Drops of 35 to 55% in USDT dominance have historically coincided with major Bitcoin rallies and expansion phases in the crypto market. If USDT dominance begins to roll over again, it could signal that liquidity is starting to flow back into risk assets. This is often what fuels the next major leg higher in the market cycle. When we compare this correction to previous cycles, the current drawdown of roughly 36% is actually smaller than what we saw in 2021, where Bitcoin dropped over 50% multiple times. What makes this cycle interesting, however, is that the RSI has fallen much faster despite a smaller price decline. Historically, this kind of behavior tends to occur near cycle pivots rather than at the start of long-term bear markets. In previous bear markets, Bitcoin dominance was near cycle lows. Right now, dominance remains elevated. This suggests that what we may be experiencing is a large mid-cycle correction rather than the end of the entire bull cycle. That doesn't mean the market can't go lower, but it does mean the broader structure may still be intact. To wrap this up, short-term risk remains high and lower prices are still very possible. At the same time, long-term indicators are beginning to align with historical accumulation zones. This is not financial advice, and you should always manage your own risk and do your own research. Let me know in the comments where you think Cardano is heading next. If you found this video helpful, make sure to give it a like, and don't forget to subscribe and turn on the notification bell so you never miss our daily Cardano updates and in-depth crypto analysis.